So we're in a very important time for all investors in the market right now. And a lot of investors have been manipulated to think things are happening that are not really happening. And they've been manipulated by media, by big social platforms, and countless others to think false beliefs, and have basically been tricked into this belief system on where they think the market's going, where they think businesses' profits are going, and those sorts of things. And so there's a lot I want to discuss in today's video that I think is very important. You're not going to hear this perspective from anybody else out there, to be quite frank. Today, this is a moment in time we're in where it is very easy to fearmonger, to say it's the end of the world, and to get a lot of clicks. And we're going to discuss why that is. Why are so many folks getting so many views? Why is the media pushing certain narratives right now? And that's going to get into some very deep places we're going to go with that one. So I hope you're ready for that in this video as well, because you're not going to hear this anywhere else. Let's just put it that way. And that's perfectly fine. I don't mind being the guy that's speaking about things that no one else is kind of talking about, and perspectives that no one else is even on this frame of thought, essentially. Okay, so yeah, I hope you guys enjoy this. As always, I appreciate you joining me. Okay, so yesterday was the end of the world. Market was down massively. NASDAQ was down over 5%. You very rarely ever see the NASDAQ down over 5%. The Dow Jones Industrial Average went down nearly 1,300 points yesterday. Okay, now after a day like that, there's kind of two usual thought processes on what's going to happen for the market on the next trading day. The first thought process is a follow through, where the market's down big again the next day. Not as big, but it's another big downward day. The other thought process that goes through people's mind is what they call a dead cat bounce for the market. So it would be a situation where the Dow maybe jumps back like 500 points or something like that, 400, 500 points, gets back some of that. Maybe the NASDAQ is up 150, 200 points, right? And that's usually a sign that, things are going to get a lot uglier when you kind of get that dead cat bounce there, okay? And I discussed in yesterday's video exactly, why that all kind of transpired, and the fact that that was a Wall Street kind of panic sell in that situation. We went through the numbers and the stock reactions, and we saw such a divergence between the Wall Street stocks, the stocks that Wall Street money's really in, and like retail stocks, for instance, and smaller cap stocks, and there was a massive divergence there that went on. Yesterday was the end of the world, right? Apple lost $154 billion of market cap. Microsoft lost over $100 billion of market cap. The destruction was massive. But what did we get today? Well, today we got some green action, but not the green action bears were actually hoping for. The green action that bears were hoping for was we were going to get that dead cat bounce, essentially. There was going to be a major bounce, and it was just going to be sold off the next day. Today, to be quite frank, we ran out of sellers in the market, and there wasn't some epic buying pressure that came in. There wasn't some epic short squeeze that happened today that people got caught off sides. It was just, where are the sellers? Where are the sellers? You're just running out of these sellers at the end of the day, okay? You look at the VIX today. It was not down huge, but it was down like 2% roughly today. Yesterday, the VIX went insane. The VIX was up something like 13 or 14% yesterday, right? Massive move. And here today, VIX just kind of chills out. You ran out of sellers. I look out there at a lot of stocks today. A lot of stocks did very, very well. Fubo, the greatest stock in the history of mankind, apparently, was up another 10% today. Elf on a Shelf was up almost 6% today. Tesla had a good day. Shopify had a good day. PayPal had a good day. Netflix, Skyworks, Qualcomm, Palantir, Honest had a good day. Honest, by the way, Honest was green yesterday. Despite all, I forgot to mention that yesterday, despite all that insane destruction yesterday, the market being a disaster zone yesterday, Honest was green. Honest was green again today, okay? Something to just kind of keep in mind. The chef didn't do anything today, right? So, there's just a clear divergence between the stocks that have already been destroyed and just starting to run out of sellers in countless of these stocks now at this point in time. Now, we pull up a big tech here for a moment, okay? And I want to discuss this because I think it's important, because this is a stock I'm personally buying right now, and that is Meta, okay? Seeing the price action in Meta, that is a 100% broken stock, okay? Does not mean the company's broken, But I want to explain to you exactly what a broken stock is. I want to show you this is not the first time Meta has been a broken stock. This is a third time in its history it's been a broken stock. But a broken stock is one in which 2022 has been an absolutely insane year in the financial markets. It's been one to remember. And one of the coolest tools I've come across so far this year is called Tendies.af. And what I'm showing you right now is their desktop website. They also have this app as well. And with the pin comment down there, you're going to get free access to everything I'm showing here essentially, okay? This allows you to see options flow activity coming in. So for instance, some Tesla 195 calls just came in right now. Some silver, look at this move for silver, right? $5.3 million of premium paid there for these silver calls here. I was talking about Meta stock the other day. So look at this. You can type in Meta, for instance, right? And there the calls come in right there. The puts come in right there. Any unusual moves we want to see right there, out of the money, in the money. Tendies has options flow, ticker details, a curated investment feed tailored to the stocks in your portfolio, in rooms where you can talk with other users about any publicly listed stock. Obviously, I love Tendies personally for the filtered options flow. Other competitors in this industry are charging between $40 and $350 a month for the same type of data that Tendies is giving away for free. Once you connect your brokerage due diligence, it's all in one place. So filter out the noise and use Tendies. I love it. Make sure that you click the link that is in the description. It will also be the pinned comment down there as well, just for easier access. Take advantage of this market chaos. Once again, that will be pinned comment. You know, the market goes up, it really doesn't go up much. The market goes down huge, it goes down way more in the market, and market has a green day and is still red. And that's exactly what we see in Meta stock right now, where that stock's just completely broken. No one knows where that company's going. No one has any faith in that. And there's no real buying pressure in that stock to push up the stock price in any form or fashion, to be quite frank. And that's exactly where this company's at right now. It's a completely 100% broken stock. This is not the first time this has happened. Meta was a broken stock back in 2012 into 2013 after it went IPO. People were very confused on what the business even did, how they were going to make money, if there was any longevity there. A lot of questions across the board. And the stock was a broken stock for, that period of time. 2017 to 2018, the stock was once again a broken stock. There was a lot of questions about, things that were going on in Meta's business model at that particular time, about, FB growth. There was a lot of questions about that. And from 2017 to 2018, that was a broken stock. In 2021, especially late 2021 through this year, it is once again a broken stock. Now, with a company like Meta, usually they don't stay broken forever, but it is a broken stock right now, and we just have to acknowledge the fact that that is a broken stock right now. The company of fundamentals broken, not in my personal opinion, and we'll see that play out over the next year or two, but the stock is broken in the short term, okay? Now, this is incredible. This is AI investor sentiment, which I've been pulling up a lot this year, okay? 18%, this was as of last week, only 18% of investors were bullish on the market for the next 6 months, okay? This is absolutely shocking, okay? And this goes back to why can't we get a continued sell-off in this market, right? Well, think about this for a moment. There are less people bullish on the market for the next 6 months right now than there was back in 2008, 2009 great financial crisis, when the entire financial system was collapsing right before our eyes. Think about that for a moment, right? The lowest we ever got in that period was right here, right before the market turned. This was literally a week before the market turned, essentially. This was the lowest number we ever got. Right under 19% of investors were bullish on the stock market for the next 6 months. And that was March 5th, 2009, okay? And so isn't that very telling about the state of pessimism, bearishness, non-belief, everything's just going to go bad forever and ever that we have in the stock market right now? That is incredible, okay? Absolutely incredible. Even in the Rona, I thought, for me personally, the Rona crash was, I think, one of the scariest moments for the stock market to ever go through. And that's why we had the fastest stock market crash in history, right? But even during that whole situation, when you had Rona start to take off and max fear and, we're going to close the economy and everybody's going to go bankrupt, blah, 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 right? Even in that period, we never touched as low of a number as we have right now in terms of people bullish on the next 6 months for the stock market. That is incredibly telling about how pessimistic investors really are right now, okay? You don't see these numbers ever. Even in extraordinary situations, you don't see these numbers. That's how pessimistic the stock market is at this point in time, okay? When you look at it, and this was, a B-Man sent me this was as of yesterday, okay? And as of yesterday, to be quite frank, why can't we get the NASDAQ to break to new lows? Why can't we get the Russell to break to new lows, right? We have still super high inflation. We have pessimism about potentially company earnings, all that. You have real estate getting worse. You have the 30-year going up. Why can't we get this market to new lows? What's going on here? Well, the truth is, we already have everybody pretty much bearish in this market that you can possibly have bearish in this market. The only way you can get that NASDAQ to break through new lows, okay, and the Russell break through new lows, and the S&P 500 break through new lows, is you're going to have a disastrous, and I mean absolute disastrous, next earnings period and the following earnings period. That's the only way you're going to be able to get that to happen, because now at this point in time, dude, everybody that's already want to be out of this market's already out. There's no one hanging around here except for the long-term bulls that aren't getting scared out of by whatever's going on short-term because they love this company, that company, this company, that company for the long-term. So now at this point in time, it's like, how do you get this? How do you get this baby down? You have to have a massive deterioration of earnings. Now, if we don't have that massive deterioration, you can't get this market down to break through those new lows. It just can't happen, essentially. And so that's a big question mark that we're going to have to kind of see what happens there, okay? And, it doesn't help when you hear things like Apple orders are coming in very strong for the new iPhone, things like that. It's like, okay, thought company earnings were going to fall apart, and I don't know. We'll have to see with that. Now, the next part that's very telling here is this right here. This is very important for everybody watching this to understand, okay? When we were going through the first, let's call it crash of the market there, this whole situation, something that was very troubling is the discrepancy between how much the Dow was down versus how much the NASDAQ was down. We're talking about roughly almost 15 percentage points there, okay? Almost a 15 percentage point difference. That's not normal, okay? Not normal at all. Versus right now, we're now at, 12-ish, 13 percentage point difference there. So we're more in where we should be, and you see the max downside, 4.2% versus like 8% for these. We need to be kind of more in those sorts of numbers to really feel like you're starting to finalize the crash, right? And the final stages of a crash, you're going to see moments like that happen. You're also going to see moments where the safety stocks fall, the big tech stocks fall, the companies that everybody was hiding out, those even fall. That's when you're kind of toward the later stages of the collapse crash, right? That started way back in February 2021, and it's just kind of cycled through. And so that's something we do see playing out right now, right in front of us, right? The mids and smalls, I spoke about this a million times the past 6 months or so. Yardini Research, we're trading at incredible valuations, incredibly low, and this leaves so much room for the upside in 2023 and in future years here. It's ridiculous. So that's good news. But even better news is how much large caps have come down. So as of recently, we're now at an S&P 500 large cap of about 16.5. I would feel more comfortable if we get that down to like 15. If we can get that down to 15, I think that would be very, very good news for the market and make the market feel much more comfortable in general. Now, to get that down to 15, you need some more Wall Street selling of some of the big stocks. Not a lot. You get Apple down 5-10%, and boom, you could already be there, to be quite frank, because that will pull down the rest of the stocks as well. So just kind of some food for thought there. We're much more where we should be. But I would feel much more comfortable if we can get that down to like a 15 by the end of this year, something in there roughly, okay? Now, the next thing that's very important to speak about is the media cycle, okay? And this is, if we're talking about social media, because media can come from so many different places, right? And media is, how does media make money? It's the maximum amount of clicks possible, right? Or people watching the TV or whatever it is, right? And so if we think about the media cycle right now, it's a very bad media cycle. And the reason being is not that much that's on, like going crazy right now to get people's attention, right? And so think about this for a moment, right? The media cycle had a very good media cycle for a while there, right? You had number 45, right? So 45, when he was in office, the media talked about him constantly. And the amount of money the media made off of, using his name and constantly talking about him constantly, okay, it was a lot of money. It was a lot of dang money because there was always something to talk about. Can you believe what he tweeted today? Can you believe what he said? Can you believe what he's not doing? Can you believe what he is doing? And this was constant, right? And, everybody watched it. And it was a full-on, circus show that everybody watched on a daily basis. And what's going on? People that were pro, people that were against, people that were middle, everybody couldn't stop watching. Oh, what's going on now? It was like a reality show, but in real life, right? So then he leaves office. And so not much to talk about there. And, there's been a few situations here and there, but not like it was, right? So, okay. So now that went away. Rona was something that the media got to pick up on for about a year, and they rode that for about a year roughly, right? Rona's still going on like crazy, but it's not in the scary period. It's not getting the clicks. It was getting, 2 years ago. Those days are long gone. So there's no Rona to talk about. The whole Russia situation, people cared about that for honestly like a month, and then they just started kind of zoning out of that over time. And so now we're in a cycle with in regards to media where where do you get the clicks, right? Where do you get people's attention? And one of those areas is talking about the economy. And fear definitely sells. It sells way better than positivity. If you tell somebody that, their house is not on fire, they're going to laugh at you, right? You tell them their house is on fire, they're going to take you all serious and be like, where's it on fire at, right? And when it comes to media and getting clicks and things like that, it's about selling the fear because that sells very, very well. And so everybody makes maximum amount of money off that, right? The creators make maximum amount of money, whether that could be a YouTuber, whether that could be somebody on Instagram or TikTok, or whether that could be somebody, on mainstream financial media, wherever that is. But telling you the end of the world, right, this is the end of the world, we're done, and they talk about that day after day after day, it's going to get people to keep clicking and keep clicking and keep clicking, right? So they make money off that. The networks love that because they all have ad spend. So they want as many people watching, paying attention to that as possible, right? And so everybody's kind of fallen into this situation, and everybody's looking at this, right? And it's the cycle we're in right now, right? And no different than we were in the cycle of late 2020 into early 2021, where everybody was paying attention to, whatever, financial asset was going to go up massively and things like that. Now we're in this kind of negativity cycle. So for you as an investor, you have to break it down and you have to say, have I potentially been tricked because I am just in this cycle where I'm just constantly watching negative stuff, seeing negative stuff, being fear-mongered, and keep clicking on it and paying attention to it? Or do I actually feel this way, right? What are the numbers telling me, right? Is this really the end of the world? Is this really the Great Depression, right? Is this really the end of everything? And I think these are fair questions to ask because the media has tricked people countless times in the past into thinking they hate individuals or, they're against this or against that, right? And for right now, it's a slow period. It's a slow period for the media. So, man, if you want to make some money, just talk every day about it's the end of the world and everything's going to end. And I'm telling you, that's where the money's at right now. That's where the clicks are at. That won't last forever. As soon as the market starts bouncing back, that starts to go to the wayside, and then the media cycle is going to have to pick up on the next thing and figure out what's the next thing we talk about now. Because crap, we don't have much to talk about, right? That's just the way it is, and that's the way it plays out. And so I just think that's important for everybody to kind of keep in mind in regards to the situation. So, I appreciate everybody joining me on today's video, even with, little controversial takes like that you're not going to hear other places. And, just keep in mind what you're feeding your mind. And if you're feeding your mind with the same repetitive stuff constantly about, negative, it's the end of the world, shoot, you're going to start thinking it's the end of the world, right? But you really got to start opening your mind up a little bit and then paying attention to what's going on with companies, earnings, start paying attention to, businesses, those sorts of things. And I think, you'll get more understanding of things have weakened, but is this really the end of the world? Is this really another great financial crisis? Or are there other things at play here? And I just think that's something to kind of consider there, and don't just, think because you see a headline, it's like, oh yes, that's it. Fear sells, man. Fear sells really well, and it's a slow cycle, man. So anyways, guys, much love as always. I appreciate you joining me, and have a great day.